You know the story. Come and take a look at a chart here that I'm showing inside my terminal. And it is Apple market cap now $1.4 trillion. What is the path to taking that number to $2 trillion in just less than 2 years?
Look, I mean, this is really, I think, halfway through what I view as the 2 to 3 year bull thesis. We're going to go into a 5G upgrade cycle, and it's a super cycle because right now 350 million of the 925 million iPhones are in the window of an upgrade opportunity going into this 5G super cycle. I think you combine that with the services business, which we think is worth about 600 billion, is how you have a stock with a 4 in front of it. So even though the stock's had a parabolic move, I think the re-rating and numbers going higher on iPhone demand continues to make us uberly bullish on this name.
Is the upgrade cycle getting shorter or just not longer?
Well, I think if you look today, you have right now the average consumer, 350 million, have an upgraded phone in 40 months. You go back 3 years ago, that was 26 months. So now you're starting to see that sort of subset of the iPhone population really going into what I view as a massive upgrade opportunity. It's almost a perfect storm of demand along with 5G. And when I look at 5G, and I just came back from Asia over the last 2 weeks, I could tell you right now, looks like line in the sand for units could be 215, 220. I think ultimately you could have even more than the peak year 2015 in terms of iPhone 6. And that's why we continue to be bullish on the name, on the re-rating, as well as numbers going higher.
You know, we had a report out earlier this week that Apple was thinking of introducing a lower cost phone in March. Does that cannibalize sales, or are they just targeting a different audience?
Yeah, different audience. I view that as sort of the drum roll. That's an appetizer relative to really the main meal being in September, call it the 4 to 5 5G phones at least. And I think that's something where when you look at this sort of interim release, that's really going after some upgrades. But Apple also needs to be careful. They can't price themselves out of the market, need to cast a wide net here, because right now it's putting an armed fence around their install base, not just domestically, but also internationally.
Dan, come and take a look at another chart inside my terminal here, which is a basic PE ratio and a valuation multiple here of Apple. You're looking at multiples of Coca-Cola, McDonald's, Procter & Gamble, big multinational healthy consumer companies. Now Apple is being folded into that bucket. Is there more room for multiple expansion?
Yeah, I mean, historically, this is a stock that's traded, let's say, 12 to 16 times from a PE perspective. And our argument is that on the services side and just the monetizing of that install base now, we're looking at sort of what I view as really a mid-20 multiple. And I think right now the big thing there is services, because services, if you look at that as $60 billion annual revenue stream by 2021, if that's 600 billion, which we believe it is, some of the parts now, you start to look at a stock that's still a significant upside here. It's a re-rating, but I mean, to that point and to many of the pundits, I think you have to look at Apple more and more as a services company, with iPhone obviously continue being the Rock of Gibraltar, but that monetization's the key that we think is just starting.
Okay, so you keep talking about services. Let's go there. What are we talking about? AirPods selling at a record, Apple TV Plus. What do you like within services?
Look, and I think also when you look at AirPods, just on the wearables, I mean, that's going to be 5% of revenue. I mean, I think 85 to 90 million units is what they sell. So I think that just shows the innovation there. But I think, look, when you look at services, you know, from the music to streaming to what you're seeing on Care, as well as just the overall App Store, you're starting to see that now. It's a mid-teen grower. And I think if you look at the average iPhone customer today from a services penetration, only 20-25% in terms of just globally. So I think as that starts to step up, as long as the streaming piece, that services business is going to continue to grow at a pace, and you monetize the install base. And that's why sometimes investors will be like, look at Nokia, look at BlackBerry, right? The doomsday sort of scenarios. The difference with Apple is that it's the retention rate on the iPhone, and it's the monetization of the install base. That's the next leg to the Apple story, and that's why right now we're going through a metamorphosis of the upgrade cycle, and more importantly, the valuation.
Biggest number you're looking at when you take a look at earnings next week?
The biggest one's really going to be around China. I mean, you want to start to see China growth year over year going into the next year, because ultimately China is the fuel in the engine. 60 to 70 million iPhones right now are in a window of an upgrade opportunity. Apple needs to show that those upgrades are happening at a pretty brisk pace. And I could tell you, just come back from Asia, I think China 3 to 5% above expectations. That's the key. I think that's the difference. You go back a year ago, many yelling fire in a crowded theater on worries about China demand. And instead, a lot of those consumers, instead of the backlash, they're buying iPhones.
At these types of valuations, I think some analysts would say that there's no room, no margin for error here when it comes to earnings. In your opinion, what is the biggest left side tail risk that could make Apple fumble a little bit?
Yeah, it would be around guidance. If there any sort of conservatism around guidance from March, any sort of sense that maybe there's some caution going into the upgrade cycle for iPhone 11. Obviously, stocks had a major move. Then you could see a knee-jerk reaction. That would be probably the biggest risk there. But to that point, I think it's forest through trees. I mean, any sort of sell-off here, I continue to view this as a 12 to 18-month bull cycle. And for Apple, that's why I continue to view it as a $400 stock here. Any sell-off, I would view it as near term, and I think you buy it. But I don't really see risk going in, just because in our opinion, I think it's $1 billion beat in terms of handicapping it.
Dan, I want to get your opinion as well on Microsoft. You have an outperform rating. What is our path from 165 to 195 on Microsoft?
Yeah, I'd say it's the first chapter of cloud. Amazon and Bezos won, hand over fist. The next chapter, I think it's Microsoft. I think where Microsoft's winning on this next stage of cloud, and you even saw with the Jedi deal, that's the key. You're starting to see more and more of these conversions on Azure and Office 365. You're seeing a re-rating in Microsoft, but also numbers going higher. So I think it's really about the cloud piece, and we continue to think that's a 3 to 5% beat from Microsoft. I think that's really the delta on the stock. And I think bull case, you can get to $200 on Microsoft. That continues to be our favorite cloud play, as there's a share gain story from Bezos to Nadella.